One of it would be about signalling, but the second most important thing for you is about the risk of the flow of capital to Turkey. It's not really about a rate cut today, is it?
Yeah, I don't think that it's about really the rate cut. Obviously, rate cut matters, you know, when you look at the Turkish lira, because the carry has been a very important driver of the market in the past few months. But what we are really looking at is two big elements. One is about the portfolio flows. Because of this very favorable, you know, backdrop that we had globally, the access of financing has been quite easy. So we have seen portfolio inflows to Turkey, about $3 billion of inflows both into bonds and equities. But those $3 billion could look a bit sizable, but we have to put it in context. We have to compare it to what has happened last year. And last year, Turkey has been under big pressure, and we have seen large outflows actually from Turkey, about $10 billion of outflows. So it has been one of the most, you know, hit emerging market last year. So we are comparing, you know, 10 billion outflows last year compared to today, year-to-date 3 billion inflows. So the overall positioning is actually quite low in Turkey. When we look at the foreign participation in local fixed income, it's just about 22%. So it's low, but it matters.
It does matter, and to a certain extent it matters because it's a sizable proportion of my... If I have some EM exposure, Turkey is going to be a larger proportion of that in a relative sense to the geography.
Absolutely.
Moodys have put it on review for a potential downgrade after the attempted coup. It's on the cusp with a number of rating agencies. Does that matter? Does it matter if Moodys put it to junk? It's already trading pretty much at junk status.
That's true. I mean, that it matters for obviously for a fixed income investor. That's an important element. But we try to not give that much importance to this element specifically because, as I said, the foreign participation is already low, right? And investors have to be invested somewhere in a way, right? And Turkey is part of several bond indices. So being already neutral or underweight is actually, even with a downgrade, it's difficult to reduce further those positions, you know, in a big scale, I mean. But in the near term, yes, I mean that those elements will matter. That will continue to weigh on the Turkish lira, that's for sure. But we don't want to be too pessimistic about the Turkish lira because we think overall that the positioning is not that heavy.
The other story that we've got this morning written by Fabrizio Farini is that there's $169 billion worth of corporate borrowings. These are Turkish corporates. About 40% of the Turkish corporate borrowing market is in foreign denominated currencies. This is where the story really matters in terms of the risk, the economic risk from the currency feedback loop.
Absolutely. This is a big source of vulnerability for Turkey, for Turkish assets in general, and for the Turkish lira in particular. This is a story that we are talking about for now years. This is not something new. We know that the FX liabilities of the corporate sector is large. It's about 27% of the GDP. But Turkey or Turkish Turkish corporates have been able to withstand the Turkish lira depreciation in the past few years. And the main reason has been probably this easy money that we have, you know, globally. So the access of Turkish corporates and Turkish banks to this liquidity has been very easy. We didn't have any disruption of this money coming into Turkey.
Well, the very personification. Have a look at WCRS on the Bloomberg terminal, and you begin to understand. You can manipulate the data whatever way you want. I've got emerging markets against the dollar. Now, this is month to date, and I think that this is the very personification of easy money. The rand had a rally of over 3%. The peso, Chilean peso, and the ruble. Of course, oil's coming back towards $45. There's the lira. The lira is the laggard in the EM trade over the past month against the dollar. That's fine. We know what that story is about. But that relief rally, does that relief rally continue in your opinion? Because as you said to me, Manus, it is about the flow of money.
Yes. Absolutely.
So if it's about the flow of money, where does it stack and rack for you in terms of the EM space?
We have been very constructive on EM in the past few months, precisely because of this very dovish backdrop that we have. We have a Fed on hold. We have the ECB expected to print more money. We have the BOJ. And we have also all these concerns about China that have receded. So
we don't talk much about China anymore, do we?
That's exactly my point, right? The market is no longer worried. So this is creating a very positive environment for EM, and especially for EM providing a high carry. So we are really, in an environment where we are chasing carry. And up until last week, we were also chasing this carry in Turkey. I mean, that the move that we have seen in dollar rand, the dollar rand is a very good example, is really a reflection of this very positive global backdrop.